Hey everyone, my name is Richard Ling. I'm with Station A, a leading clean energy marketplace that helps businesses streamline their clean energy procurement process. And today I'm thrilled to be talking with Dan Holloway from Sustainable Capital Finance, or SCF, to basically help you, the listener, understand the complex world of solar financing and explain how any business can go solar affordably today. So welcome, Dan. How's it going?
Doing great. How are you doing?
Good, good. So why don't we start off just by a quick intro of yourself, Dan? I know you've done a lot of work in not only solar, but also semiconductors and just have a broad industry experience across the board. So if you may.
Absolutely. Well, thanks for having me. Hello, everyone. My name is Dan Holloway. I head up our originations and acquisitions team here at Sustainable Capital Finance. I've been in the solar industry now for about 14 years. And I started selling solar pretty much from the ground up, starting at the resi level and quickly moved on to starting a commercial team within our firm. And what I realized was that there were not a ton of financing options, almost none really at the time for projects in the, let's say, 100 kilowatt to a megawatt range. And I felt like there was a big need for this type of financing. And this has really been the goal of SCF since we started. We financed over, I believe it's 150 megawatts of commercial and industrial solar and solar plus storage projects in the United States market. And we work closely with NextEra Energy as our primary funding source for the majority of our projects. But we also have other finance partners that we work with for projects that don't necessarily fit within NextEra's parameters.
And for those who don't know, like just taking a step back, this world of solar financing, could you just briefly describe, why this is even a thing? If you're in a buyer's shoes, let's say I'm a business who wants to go solar. I assume there are, a lot of different ways to buy this solar project. You can just buy it all cash, or you can do this world of financing. And then in that world, there are a ton of different options. So could you just describe, from a buyer's perspective, why solar financing is important? And, perhaps you can delve into SCF's particular niche as it relates to this industry.
The primary reason people look at financing is that they don't necessarily want to spend their CapEx budget for a solar system. They'd rather spend it on their business, whatever other needs they have. So when you look at finance, there's PPAs. We'll talk about those, power purchase agreements. You can get a loan. That's another common option out there. And you can get a capital lease. Those are pretty much the three primary ways that people go about it. Very different paths to go down. A loan, like any other loan for a business, it pretty much absorbs a pretty big chunk of your available loan capacity, which is the reason I think some people are a little leery of going down the loan path. But it's typically some sort of fixed payment over a period of years. A capital lease looks more like a typical capital leasing arrangement where you're leasing equipment for a period of typically 7 to 10 years. Difficult to make that work from trying to save money from day one. But if you're looking to purchase the system in the shortest amount of time possible, that can be an option. And then there's the power purchase agreement, which is what we typically specialize in. And a power purchase agreement is essentially an agreement that allows a third party, such as SCF, to purchase a solar, potentially or solar plus storage system, install it on the customer's property. Could be a roof-mounted carport system, could be a ground-mounted system. And then we would sell the property owner electricity at a discounted rate for a period of years, essentially to recoup our initial investment.
So since SCF really, like you said, specializes in this world of PPAs, let's delve deeper into that a little bit. So I guess like from a high level first, I'd just be personally curious to know, why does SCF choose to specialize in PPAs rather than leases or loans? Is it just by market demand and responding to that, or just curious the general reasons, I guess.
Fair question. So I would say in general, we believe power purchase agreements provide the most benefits ultimately for the end user. And that has really been proven out over time. I think PPAs far outweigh the majority of certainly loan products that are out there. But in addition to that, capital leases, operating leases, that lease market tends not to be cash flow positive for those first 7 to 10 years. And for that reason, I think a lot of people shy away from that type of arrangement unless there's really no other options. So, if you want to delve into kind of all the different benefits that go with a PPA, I would say first off, business owner gets to benefit from less costly energy from day one. There's no money out of pocket. They're saving money right out of the box. Secondly, property owner will stabilize their energy costs over time. And I think this is becoming more and more important. Certainly, we've seen some spikes in the energy prices recently with the war in the Ukraine. And it's certainly driven up all types of energy costs across the board. And so I think a lot of people are getting quite a bit of a surprise when they open up their energy bills. Whereas with PPA, what we're going to do is set up a very fixed number of escalation. It could be as low as 0% each year that your energy prices rise. If we can make that work, it could be as high as 2.5%. But when you compare that number to the inflation rate of electricity in the country right now, which ranges anywhere from, let's say, 2 to 6%, depending on what state you're in, knowing that you have a fixed increase each year gives you some stability in terms of forecasting what your energy costs are going to be from year to year. So that stabilization of your energy costs of not seeing those random spikes whenever they hit can be, I think, a big benefit for people. There's also tax benefits that go with solar systems. Typically, or currently right now, the investment tax credit offered by the federal government will essentially pay for 26% of the solar system. If you are a nonprofit, let's say you're a church or a municipality or a school district and you don't pay taxes, you're not allowed to take advantage of that. So we can do that on your behalf. There's also depreciation that goes with that. And that's also something that we can take on your behalf. We will take advantage of all of those benefits that are available and lower your electricity rates accordingly. Let's see what else. We will also take care of the system. So when we talk about operations and maintenance of the system over the period of the term, that's on us. And it is very much in our best interest to make sure that system is operating at peak performance, because the off-taker, or the customer in this case, would only pay us in the event that the system is producing energy. So they're only paying on a per kilowatt hour basis. If the system's not operating for any reason, they're not paying us. So it is definitely in our best interest to make sure the system's operating at peak capacity. And then lastly, there's a huge marketing piece that goes with the idea that your company is using green energy to power your business. And this can be used in, as I said, marketing, sales, brochures, things like that. And I think that's becoming more and more of an important factor when people look and decide who they want to do business with. So I think those are kind of the key factors that most people look at when they're evaluating a PPA.
Well, thank you for the great explanation for how PPAs work and all the ins and outs of those. I guess a natural follow-up question, if for someone who's unfamiliar with doing PPAs at all, could you just describe how they actually work from an operational standpoint? Like if I'm a business owner, I want to do a PPA, what does that actually look like? What paperwork is involved? What contracts do I need to sign? Just like the nitty gritty, how does actually a PPA work, from start to finish?
Sure. So typically what will happen is we will collect a person's electricity bills. We're looking to see what they're currently paying for electricity. We'll do an analysis. Typically, we'll bring in an installer that will do a site walk. We'll make sure that we understand everything about where the system's going, how we're connecting to the building, things like that. And then we will go ahead and design a system and come back with a PPA rate that we're looking to be anywhere from 5 to 20% below where they're currently paying for their cost of electricity. We will put that into what we call a term sheet. Term sheet is going to be a three-party agreement, typically between us, the off-taker themselves, the customer, and ultimately the installer, who's going to be putting the system on the building. And it'll basically break down everybody's responsibilities. They'll show them the PPA rate, what the savings are going to look like, et cetera, et cetera. Once they sign that term sheet, that allows us to start the diligence process. And the diligence process is made up of, we're going to check the off-taker's credit. We're going to make sure that the company's doing well. We're also going to do some diligence on the production of the system. We're going to diligence the cost of electricity, make sure all of our numbers are copacetic and what we said they're going to be. And then ultimately, we're going to put a couple of agreements in front of the off-taker. So we're going to put together the actual PPA itself, and that'll break down all of the terms that go with that. There will be a site license agreement that typically breaks down the fact that we're allowed to be on that site for the period of the PPA itself. And then there may be something called an SNDA, a non-disturbance agreement, if they have a loan with the bank. So we're getting really into the weeds on this, but those are the three agreements that they would typically look at. We will also put together what we call an EPC agreement, an engineering, procurement, and construction agreement. And that would be with the installer that basically says, here are your responsibilities, here's the system we need you to build, et cetera, et cetera. So those are the main contracts. Once the system is built, we turn it on. From the customer's point of view, what they're going to see is essentially they're going to get a bill each month. It's going to break down how many kilowatt hours the solar system created. It has a fixed rate, the PPA rate that they signed up to. And essentially they pay that like they would pay their energy bill each year. And that would last for the term of the agreement. Other than that, there's really not much. So everything else, the maintenance, the operations of the system, all that stuff is handled by us behind the scenes, and they're not aware of any of that.
So I guess one natural question is like, why isn't everyone doing this? It sounds like a very like no-brainer deal. And is it based on like a PPA is not economical for everyone all over the US? Can you just talk about like, that general question? Because I'm sure it'll be on people's mind.
Well, first off, I like the way you think. Why doesn't everybody do it? That's a good place to start from. And I think part of your answer is correct. PPAs don't work everywhere, and the reason being is that the cost of electricity in some parts of the country tends to be so low that it's difficult to get underneath that with the third-party agreement. Other than that, the other reason people don't go with PPAs in often cases would be that they have sufficient amounts of cash to purchase the system outright. And we see that in a lot of cases as well. They want to own the system, they want to have it on their books, and off they go. So those are the two typical reasons we don't see people move forward with power purchase agreements. But in general, for the rest of us, it tends to be a very simple setup in terms of low out-of-pocket cost and immediate savings.
Well, thanks for that overview, Dan. It makes sense that it's not fully economical for everyone everywhere. And I guess, could you describe in general who can qualify for a PPA? Like, does it depend where you are, like which state you're in, or what kind of business you are, if you're a for-profit, nonprofit, etc. Could you just describe the overall landscape of like who can qualify for PPA in general?
Yeah, absolutely. Yeah, and that's a good question. So I would say in terms of the company type, that typically is not that much of an issue. We work with for-profits, we work with nonprofits. I would say the majority are something north of 60% of the projects we do tend to be with nonprofits because they can't take advantage of the tax benefits. But we do work with quite a few for-profit businesses as well. Like I said, we work with cities, we work with schools, we work with larger churches. Really, the only thing that would prohibit a particular off-taker from necessarily moving forward with a PPA might be credit. If their credit isn't sufficient for a finance institution to be able to underwrite them, that might be one reason. But other than that, the type of company that they are, business that they are, typically doesn't come into play that much. The one thing you mentioned about geography may have a pretty significant impact on that, and that would be that some states that have very strong utilities have necessarily outlawed or not allowed for the concept of third-party ownership of solar systems. And so it's a pretty small number of states. Typically, they're in the South and on the southeastern coast. So for those states where PPAs aren't allowed, that might be one of the contributing factors for why you couldn't move forward with PPA. But for the vast majority of the states, PPAs are allowed. And so that's something we can certainly get to through the software itself.
So another question just about like, this whole zero down nature of PPAs, it made me think of sort of like car financing in a sense, kind of similar in the sense of you can get a car for zero down and just pay it back over time. But, I've seen from the industry, a lot of buyers skeptical if they haven't heard of PPAs before. They're like, what's the catch? Like, what's the counterparty getting out of this, So for the sake of transparency, and I think this would help buyers understand, what both parties are getting out of this PPA in general. So we understand now that the buyer is getting this zero down financing method. They don't have to do maintenance. They get a lower electricity rate. It all sounds perfect. What is the other party getting, like SCF? You can talk in terms of SCF in general or providers as a whole. But how do providers make money from PPAs? And just, could you just describe like the other side of things, I guess?
Yeah, so I'll use Nextera as an example because, as I mentioned, they are the majority, they're the financer for the majority of the projects that we do run through our platform. Nextera is a large independent power producer. They're the largest in the country. They own 20 gigawatts of wind and solar assets. And the question would be, why do they own these? What do they get out of this? And they get two things out of it. And most companies that invest in this space are really aiming for these same two goals. And one of them is they are looking to reduce their tax burden. So each year they create X amount of profit that they ultimately have to pay taxes on. To the extent that they invest in these types of assets, they can defer or eliminate the amount of taxes that they would pay using the tax credits that they would generate through the purchase of these types of assets. The second thing they get is long-term earnings. And, they're going to look for businesses that have strong credit, that they feel are going to be around for the length of the term of these agreements. And if they feel comfortable with those people, then they will engage with those, knowing that over the history of PPAs that have been out there, the default rate is incredibly low. It's almost non-existent because they do a really good job. And one of the last bills people stop paying typically is their energy bill. And so for that reason, these are very safe assets. So they get very good credit partners that bring them long-term earnings for a long period of time, and that really boosts their stock price over time. So those are the two primary reasons that I think majority of people would invest in these types of agreements.
So one interesting critique I've heard of, the solar industry at large and, PPAs as well for this is that we're too overly dependent on tax credits, and notably I think what you're referring to when you talked about tax incentives and credits was the federal ITC, which is a 26% basically tax rebate going down to 22% next year. And there are also some state level incentives. Could you just generally describe, like, is the solar industry and I guess PPAs as well actually very dependent on these, tax credits to the tune of like, if these weren't around, could they still pencil?
The goal of any type of long-term tax credit that gets put into place usually is that it's only going to be offered for X number of years until the industry gets going, if you will. And the hope is that as we reach economies of scale, that the cost of the underlying installation of whatever it is goes down over time. And at some point, there's a transition period where tax credits are no longer required. And the solar industry, to some extent, has followed that. There's two aspects to whether or not a PPA is going to work. One is the cost of the installation itself. How much the cost to put that thing there. The second part of that is what's the underlying cost of electricity that we're sort of competing with. Electricity rates in general have gone up. Equipment costs have gone down over time. However, recently, because of part shortages really in the entire industry, costs have really started ramping back up pretty heavily, and we're not seeing any slowdown to that right now. So where we felt like there was going to be this inflection point where the cost of the equipment continued to go down and the cost of electricity continued to go up, there would be a point where tax credits would no longer be required. And I still think over the longer term that is probably going to be the case, that we're going to reach that inflection point over time. However, right now, with the increasing in equipment costs, that's really pushed that date out to some unspecified time. And so for the time being, I would say the tax credits certainly help us to make PPAs more competitive in more cases than would otherwise be the case.
Awesome. So thanks for that overview about tax credits and how it affects the solar industry. I guess my next question is kind of related, but from a provider standpoint, what are the biggest factors or variables that make a PPA pencil for you guys?
I think the three biggest things we look for to make PPAs pencil would be the underlying cost of electricity. We've already discussed that in each region. The second would be insolation, and that's a fancy word for how much sunshine each particular geography gets. It turns out that as you go farther and farther south, the amount of sun you get typically increases. And then the other factor is weather. Do you get a lot of weather in your particular state? So the amount of solar hours per day ranges wildly across the country. So that's another aspect that we have to look at. And then the third, and this is becoming less important or less a factor over time, is underlying incentive structures within each state. So for instance, in California, really we're down to what they call the SCHIP, the Self-Generation Incentive Program, that really only applies to the storage aspect of it, but we don't have anything else available from an incentive standpoint for the solar piece. In other states, like New Jersey, for instance, they have what they call an SREC program, which is a solar renewable energy credit. And the credits in New Jersey are such that almost any deal within New Jersey, maybe that's an overstatement, but really works pretty well from a solar aspect. So New Jersey tends to be one of the higher states in terms of adoption rate of power purchase agreements and solar in general. Massachusetts also had some pretty heavy duty incentives over time. Some of those have expired or been secured, and the programs are no longer available. But in general, incentives can really make or break certain states that don't have a lot of sunshine in their particular state.
Got it. Yeah, that makes a ton of sense. So it's like the current cost of electricity, the incentives, the amount of solar radiation that you're getting for the panels, and a couple other factors. Those are kind of the main ones that
Yep.
make or break a project. Okay, cool. So I'm gonna switch gears a little bit and talk about the difference between competitive processes and sole source processes, because as you know, and the audience may know, Station A has this competitive RFP marketplace where we post projects that providers like SCF and others can bid on, and basically give their best PPA price or all cash price, whatever it might be for that particular project. And one interesting phenomenon we've seen is that, and this may come as no surprise, but in a competitive process, PPA prices will be, usually much lower than if you did a project with, through sole sourcing, which is just a term that means you go direct to a buyer and they, pick you guys as the chosen provider for the project. So could you describe basically from a provider's mindset, when you're doing a competitive RFP, let's say, versus going directly to a buyer, how do you guys think about PPA pricing in terms of, not necessarily getting the lowest price and always being a race to the bottom, but it usually is more competitive than sole source pricing. So could you just describe how providers think about that? Like, is there a minimum hurdle rate that you're trying to achieve? Do some providers propose PPAs at a loss in these competitive RFPs? How does that world work in general?
Yeah, so I would say that when you look at the RFP process, what you find is that there are specific installers or developers that target specific segments of the market that they're very good at. So some people are very good at building 50 megawatt systems out in the desert, and they've got big crews. But for every project, they spin up an entire team to basically do the analysis and the installation, all that kind of stuff. If you gave them a 1 megawatt project, their pricing would probably be terrible because they'd put that same crew on a very small system. So that's what we find the RFP process really helps with, is to understand who's good at what segment of the market. And when you use that RFP process, that's what you're really doing. You're weeding out the people that really aren't a good fit for your type of installation. And same thing with the finance side. Some finance groups really will only look at projects that are bigger than 5 megawatts. That's the vast majority of the finance companies out there. We happen to choose a segment of the market that was much smaller, what we call C&I, commercial and industrial. And for that, we think we have incredibly competitive pricing for smaller projects, let's say below a megawatt. Doesn't mean we don't compete for bigger projects. It's just, as you get above 10 megawatts, there's a huge market out there for people that will support that. And that's really not where we typically play. So yeah, I think the RFP process, the value of it is bringing out best of class for the type of system that you're evaluating.
Got it. That's a really great point. I haven't really thought about it like that, but that is super true. It's like not all solar developers are the same. Not all providers are the same. And there are different markets and niches that everyone focuses on. And that really attests to the value of the RFP process. And that makes a ton of sense. So, in relation to that, one, not critique, but comment that I've gotten from buyers are that like the solar market is relatively commoditized in the sense of, a lot of the same providers are using the same panels, using the same kind of labor workforce. They're installed in the same sort of way. So what would you say are the key differentiators when you're looking at a solar provider? Let's say SCF versus X solar provider, or just in general, what are the key differentiators that a buyer should be aware of when choosing a solar provider? Is it like, and this is beyond their cost. So is it like, their project experience? Is it their workforce? Is it their sourcing? Could you just describe, those differentiating factors in general?
Yeah, good question. So I would say that your initial assumption that the market has been commoditized is pretty accurate. We're down to a relatively finite list of panel providers, inverter providers, racking providers, things like that. And that's a good thing. It means the market is mature. You're not going to get people installing a bunch of equipment that's really untested or unproven. We certainly have a defined list of the types of materials people can use for all of our projects. Because we're very interested in these things lasting the entire term of the agreement, making sure that they're going to be, as I mentioned, operating at peak efficiency through the life of the term. So that piece is really accurate. What differentiates providers out there really is experience, comfort level, ability to work with the off-taker themselves in a way that they want to be, worked with. So what we always look for is, give us your references, show some people that you've installed equipment for that had an enjoyable experience and really liked the way it worked out. We also look for people that have installed the types of systems that we're that we're looking at. So if it's a 2 megawatt system, we want to see that you've installed a bunch of other 2 megawatt systems. You've gone through the interconnect process with the local utility. You've worked with the local AHJ, that's the local authority that will actually be signing off on the system. So we just want a comfort level that you know how to build the system, you've built these types of systems before, and ultimately the customer had a good experience. So those to us are the most important aspects of choosing installers.
One other thing we've heard from buyers of clean energy, and this goes for not just buyers of clean energy, but buyers of anything really, like any large capital expense, be it a car, a house, whatever it might be, is they value provided with a lot of honesty and transparency. So are there any like loopholes or hidden fees or anything that might swindle a buyer when executing a PPA that they should be aware of? Anything you've seen in the industry, anything that SCF tries to counteract? I think this is just important for transparency and honesty from the buyer perspective.
Yep, I think that's a fair question. I don't think there's a lot. The contracts are pretty well written. They're pretty, I would say, common now. There's a board called SIA, which oversees a lot of the standards that are developed in the solar industry. And they have a standardized contract that we use a version of within our organization. So I think, like you said, the contracts have been pretty standardized. They're pretty mature, pretty simple for people, at least legal people that look at these on a regular basis to get through. So I don't think there's a lot of gotchas. There's no underlying hidden costs that really can pop up. You're not really paying anything out of pocket from day one. The only thing that's of consideration that I would throw out there and people need to be aware of is that you're signing up to a long-term agreement. Typically, these are 20-year agreements. And when you think of it from that point of view, if you're going to be in your business for that 20-year period, really nothing to worry about. If you plan on leaving in 7 years, then you're going to have to think about what's going to happen to this agreement. How is it going to transition? What typically happens is that the new party that would be purchasing the business or the building would look at it and say, am I willing to basically step into this agreement? And really the reason that they typically do is that the underlying cost of energy has continued to go up at whatever that inflation rate is in that particular area, where ours is capped at a fixed number. So when you look 7 years out, 10 years out, 12 years out, our cost of electricity is typically substantially below market. And so for that reason, there's every benefit in the world from their point of view to step into that agreement because they're getting electricity at a much lower cost. If the new buyer were to say, no, we're not interested in that, then it would be on the off-taker to essentially buy the agreement out for the remainder of the contract. And they would have to look at that as part of the total sale of the building. So
Got it.
I don't want to say that's a gotcha because it's clearly stated. It's all broken out. Everybody knows what they're stepping into. But that's just a consideration that people have to take into account.
Got it. So if you're like a building owner and you're moving out in 5-10 years, you may not want to sign a 25-year PPA deal unless you're willing to buy out the system, or that you can easily transfer it with your property. You just got to be aware of that. Is that right?
Yeah, exactly.
Okay, cool. So zooming out a bit, we've been talking a ton about PPAs, like the nitty gritty of them, but I want to talk about the current state of this PPA market because the economy, as you know, is quite tumultuous right now. Some say we're in a recession already. There are wars happening. And the supply chain is, kind of uncertain right now, as I understand it. But can you just give us a brief on what is the current state of the PPA market relative to when times were normal, whenever that might be?
Yeah, so I would say there's a couple factors there to think about. In general, when times are good and businesses are raking in a lot of cash or their underlying stock price is really high, oftentimes they will look at cash as an option to purchase a system just because they're in the position to do so. And it almost feels like you're playing with the house's money if the stock market's up, and you can basically turn that into a lower cost of operations. So I think a lot of that has been going on for the past couple of years because the stock market had been on just a flat out tear for the last 5 years. Now that the stock market has really taken a 20-25% hit, I think a lot of people would be rethinking that particular strategy, and PPAs become a more interesting option to conserve cash, right? So I want to lower my net, or I want to increase my net operating income, ultimately without any out of pocket. That can start to sound pretty good to people. So I would say we're starting to see some inkling of that out there, where the number of projects we're looking at are starting to increase again at a decent clip, and I expect that will probably accelerate over time. In terms of the underlying cost of capital, certainly as interest rates rise, we're seeing the cost of debt go up. Debt is a component of all the projects that we do. And so, yes, our underlying cost of capital has gone up to a certain extent. It's not a one-to-one relationship because debt's only a portion of the total investment that we put into these. But yeah, costs have definitely gone up there. And we are seeing, because of supply chain constraints, the cost of the underlying system has gone up a little bit. But if you compare all of that to the cost of electricity, which is really jumping this year, I think PPAs still look relatively competitive in the market right now.
Gotcha. That's actually a great point that I didn't think of. It's like, now that the economy is, not as strong as it was before, now might actually be a pretty decent time to do PPAs because you don't have that capital outlay, and you can get these systems for zero down and take advantage of that. Is that fair to say in general?
Absolutely. Yep.
Gotcha. Well, Dan, you've been incredibly generous with your time. I want to be mindful of your time as well. So please, if you have any parting words to say to the audience, either about SCF or PPAs or anything at all, now's your time to do it. Feel free.
Absolutely. I think the one thing I would say is how excited we are to work with Station A. We've been talking to the Station A team for probably 3 years now. And the fact that we're getting to launch together is really exciting, that we finally culminated in this point here. The thing we love about Station A is, if you are just a person that owns a building somewhere in the country, it's very difficult without calling a lot of people to understand if solar would be a good fit for your particular property. And the analysis tool that Station A really provides is really an excellent way. It's just a first step to find out if solar is a good idea or if PPAs are a good idea. So that's the whole reason we wanted to partner with them from day one. And like I said, we're very excited to see where this goes.
Awesome. Thank you, Dan. You heard it from Dan himself. Go to stationary.com if you're interested in learning more. But actually, perhaps more importantly, if the audience wants to learn more about SCF, where can they go?
You can go to scf.com. Pretty straightforward. And just go to the info link at the bottom.
Awesome. And last but not least, if people wanted to get in touch with you, Dan, because I know you lead a lot of the business development efforts at SCF, how can they reach you? Yeah, my email is dholloway, HOLLOWAY @scf.com, and would love to hear from you. Awesome. Well, thanks again, Dan. This was really informative. I hope it helps a ton of buyers out there and just in general moves the needle on getting more solar out there. So appreciate your time and hope to have you back someday. Absolutely. Thanks for having me.